Well, that's right, Brian. And we've had some pops earlier. We had some in June, if you recall, and the market got a little bit ahead and the Fed took away the punch bowl. And they did it again in September and going into October. We were unsure, but the market is rallying again. And yet inflation has not slowed down. We don't have a print yet that shows it's slowed, and we haven't had a change in tone or policy from the Fed. So there's a very good chance that this bit of euphoria may be tempered once again by the Scrooge mentality over at the Fed.
Well, okay, Scrooge mentality, but you have to admit they were the Scrooge McDuck a year ago with, like, jumping into the pool full of gold coins. You remember that, cartoon? That's what they were doing last year. So is it a surprise to anybody that they're now Ebenezer Scrooge, taking all those gold coins away? I mean, if this comes as a surprise to anybody, I don't know if they should be in the investing business.
Well, they're trying to fix a problem that they created. So your point is correct and well taken. And right now, all eyes are on the Fed. They really also should be on inflation. That's the dynamic duo driving the markets. Yes, we're looking at the dollar. We're looking at earnings. We're looking at this election cycle. But it comes down to, is inflation slowing? And until we get clarity on that, committing all your capital to your stock allocation, I think, is a bit premature. I do think, however, as you look out, stocks become more attractive. Look, a year ago in October, the market was at a 23 multiple. Now it's under 16. The roles have been reversed. So if you're looking longer term, this is a better valuation. I'm just saying, let's wait until we get a bit of clarity on those all-important inflation numbers.
Okay, let's talk about what to do. There is an election, by the way, and however it turns out, we're not being partisan here, but if the polls are correct and the GOP does take the House and or the Senate, given all the tensions with China and the fact that they're building aircraft carriers, China's really arming itself, and we're not talking a lot about it, but they are. Is this all kind of, I guess, sadly, good news for the U.S. aerospace and defense industry?
Well, as you say, it's unfortunate, but it is true. And I think all the other countries that are looking at what Russia's doing with sending in a drone war into Ukraine is going to want the other countries to get air defense systems. And our companies like Raytheon and Lockheed are leaders in that. And I think if investors want to look at a defense sector ETF, that's probably a better way to play it than an individual name. There's single company risk in a bear market. And at this point, we prefer to be broader based in an ETF. And I think the defense sector ETFs, which have names like a Lockheed or like a Raytheon and even Boeing, are going to be well positioned to capitalize on this unfortunate war that we're seeing and the effects it'll have in other countries.
Yeah. China building aircraft carriers and a mock-up of a U.S. carrier in the desert for some reason. Scary times. Mark Avallone, appreciate it. Thank you very much. The ITA.
Good to be here.
All right.